Welcome to the June 2025 edition of our Ryan Wealth video series. School's out, summer vacations are in full swing, and the Central Valley heat has officially arrived. Whether you're juggling family barbecues, weddings, or just trying to keep up with a busy summer schedule, I appreciate you taking the time to tune in this month. We hope you're enjoying the new energy we brought to these videos, mixing creativity and style with reliable information that keeps you in the loop on the ever changing financial world around us. May felt like a breath of fresh air for the markets after the roller coaster ride we all endured in April. Less stomach dropping, more smooth cruising. Since hitting a low point back on April the 9th, we've seen a strong rebound. Tech stocks, especially anything with the word AI attached, led the charge. It's like investors heard robots are still smart and hit the gas. The S&P 500 and Nasdaq both posted solid gains for the month of May, helped by better than expected earnings from some of the big names. Even the Dow showed up to the rally, just a bit fashionably late as the more traditional sectors took their time catching up. On the global investing front, international markets have quietly outperformed U.S. equities so far in 2025, reflecting stronger economic growth trends in several regions, including parts of Europe and Asia. We're seeing increased investor interest overseas, particularly as inflation pressures ease and central banks abroad take a more supportive stance. A weaker U.S. dollar has also helped boost returns for U.S. investors holding international assets. This rotation in leadership between U.S. and international markets is a reminder of why global diversification matters, especially in years like this, where performance drivers can shift quickly depending on economic policy, currency trends, and local growth dynamics. Turning to the bond market, May was more of a reset. For a while, there was a lot of hope that interest rate cuts were just around the corner, but inflation stuck around a bit more than expected, which made investors pump the brakes on those expectations. As a result, bond yields ticked up slightly, especially for longer-term investments. It was a great reminder that the path forward might not be as quick or smooth as some had hoped. With that said, think of your investment portfolio like a garden. For many years, the bond section of that garden didn't produce much. It was like planting in dry soil. But now the conditions have improved. The soil is richer, the sun is out, and bonds are finally growing again. They're producing more income and contributing more to your overall harvest than they have in a long time. Many investors are using this environment to lock in better yields and build more balanced, diversified portfolios going forward. Everyone now has their eye on the Fed's big meeting on June 18th. Earlier this year, many were hoping we'd see interest rate cuts by the beginning of summer. But with inflation still hanging around more than expected, that now seems unlikely. While prices have come down a lot since 2022, they haven't dropped far or fast enough for the Fed to feel confident about lowering rates just yet. Right now, it looks like any rate cuts might not come until later this summer or possibly not until the fall. In times like these, it's reassuring to remember that you're not navigating the markets alone. You have a dedicated team servicing your accounts and helping you focus on your financial future. If you're looking for more insight, visit ccmg.com and check out the Insights and Resources page for timely updates from the investment professionals at Clark Capital, or tune into Bulls and Bears with Herb Morgan on YouTube for his weekly take on the markets and the economy. Before we wrap up this month's video, we have a special announcement from our Client Communications Manager, Kiana Davis.
I wanted to share a quick update before we wrap up. Starting in July, I'll be transitioning to a fully remote role with Orion Wealth as I relocate to Dallas. My last day in the office will be July 11th, but I'll continue to be fully available by phone, email, text, and Zoom. Please don't hesitate to reach out if you have any questions or concerns, both now and in the future. I'm excited about this next chapter and grateful to remain a full-time part of our team.
June is a great month to take a breath, check in on things, and make a few quick tune-ups, whether it's your finances, your calendar, or your vacation plans. We truly appreciate you spending a few minutes with us each month and staying connected. Thank you, as always, for letting us help you navigate your financial course. We hope you have a relaxing and enjoyable summer.